Portions of the following program may be pre-recorded.
The following program is sponsored by Max Out Savings Advisors. The views expressed during the broadcast are solely for entertainment purposes and do not necessarily express the views of KNTH, its management, Max Out Savings Advisors, or its sponsors. Max Out Savings Advisors and members of the Max Out Savings team may or may not hold securities mentioned during the show. Plan for your prosperity, prepare for your retirement, safeguard your savings, and nurture your investments. This is the Max Out Savings Show with Ted Gioka, a presentation of Max Out Savings Advisors. Now, here's your host from Max Out Savings Advisors, Ted Gioka.
Welcome to the Max Out Savings Show. I'm Ted Gioka, and we're talking savings, investments in your retirement here on the show. Our show is all about saving money, building up wealth, and understanding the world today. We try to take a lot of very complex issues, break them down simply so you can understand them, and so you can figure out how to protect yourself in retirement, how to build up retirement, and how to navigate today's very difficult and volatile world. Our motto and our philosophy is to save aggressively and invest conservatively. Save aggressively and invest conservatively. That's the key to building up wealth over the long term. And we've seen it this week with this just tremendous volatility in the markets. And so you always want to keep aiming for that. Keep protecting your portfolios and understanding the world today. So we got a lot to talk about on the show this week. A very volatile week in the markets. A lot of things happening across the world and affecting the markets. And so it's interesting. This week was really the markets were down. They weren't down tremendously for all the angst, everything. If you look at the S&P 500, it was only down about 2%. It was off a little worse than that. It's really these things have been going down for about 3 or 4 weeks, and the S&P is still it's down about 4% or so. It's really not that down that much. But to listen to Wall Street talk, there was panic in the streets, and so where do we go from here? We've had a reasonably good year for the markets. We've had a really good year this year, and like on wood. But and so where do we go? And I think how you have to kind of look at this is we're not down a whole lot yet. Yeah, and we're still in a world where we're in a transition world with Donald Trump is coming in and he has said, look, what I want to do is get the factories back here. I'm going to get the illegal aliens out of the United States, which quite frankly hasn't done since Eisenhower's Operation Wetback, that was the actual name of it, back in the 1950s when they eliminated large numbers of illegal aliens. And so we have a couple things going on. We have companies, so he's worked very hard talking to companies, cajoling them to bring their factories back to the United States. He's put tariffs on for 2 reasons, actually. These tariffs are very important. Number one is it's forcing. Look, we've played the open trade, the free trade, the globalism card for the last 35 years, and basically it's just allowed China to lie, cheat, and steal their way to stealing all our manufacturing plants. They all closed down all across the country, and they moved them over to China, and so that hasn't worked, and so. We have 2 things. We have all the factories over there. We have a lot of people that need jobs here, good jobs. AI is going to eliminate a lot of these fancy corporate jobs, but AI is having a much harder time. It's going to have a much harder time eliminating manufacturing jobs, construction jobs, and things like that. So that's where the jobs are going to be. So we want those jobs back here. At the same time, we need the funds. But in addition to that, we have a situation where China has control of all our all of our factories and stuff. So now, in an emergency, if they go to war with us, they cut us off from all types of critical things. I mean, 80% of the precursors from antibiotics and many drugs, particularly antibiotics, comes from China. It's over. And by the way, that statistic, I'm not real sure. That's the number that's a little foggy in my head because we brought it up on the show continuously in 2020 when we were cut off from everything. And so you would have thought we would have gotten religion at that point in time and said, oh my gosh, we had a pandemic and we could not get the supplies to us because it was in China. We need to change. Here we are, 5 years later, nothing has changed, and so we're putting on tariffs this time. So look, it's going to cost more. We're going to force these companies to bring the factories back to the United States, and that's going to bring back factories back, increase manufacturing, and it's also going to give us income, about $250 billion to pay down our $38 trillion deficit is, and as we like to say on this show, nobody really understands what a trillion is because the number's so gigantic. And we're running $2 trillion a year budget. So this is a good way to do it. Now, this is going before the Supreme Court. The Democrats are in a panic over it, and everyone's trying to stop it to save China's jobs. But so this is the plan. Now, that's going to create a lot of jobs next year. It's going to be all these plants, these executives. The numbers we use is Trump says there's several $1 trillion worth of factories. Our number is $500 billion worth of factories, which is a lot of factories coming back next year. Companies have been working, deciding where they want to put the plant. They're buying the real estate. They're hiring a contractor. They're getting the permits. They're getting the taxes. That all takes time. So what we have here is a situation where next year we should see a pretty good year. Now this year the economy is slowing. The operation to remove illegal aliens from the United States is slowing the economy. The ICE is raiding, has set up shop in Charlotte, North Carolina, anyway on the East Coast, and I think the number is 850,000 people live in the city, and there's like 100,000 illegal aliens. You're like, really? I mean, how did this happen? And so now all of a sudden, business is slowing down there. Illegal aliens around the country aren't going outside. They're not going to the store. They're not going to restaurants. They're not going to bars. They're not spending money. They're not going out and buying a car because they're not sure what's going to happen and they might get caught and sent back to their country. So that's causing a slowdown. We believe it's a substantial slowdown. Okay, so I'm going to stick just a minute. We think it's a pretty substantial slowdown. Now, the people at Walmart have assured us there's really not a slowdown. We don't buy that. And so I think for now the economy is slow, and that's starting to affect the markets. And the other thing is people are starting to question AI. Is it going to be profitable, and do we have some money for this? And this is what all this uncertainty is creeping in the market, which is why we saw these big moves in the markets today. And we're going to expand upon that later in the show. Tell you what, let's take a call. Who's up first? Welcome to the Max Out Savings Show.
Hey, how you doing today, Ted? You know, you're
Good.
talking about all the manufacturing that moved over to China. It didn't do it on its own. A lot of that was done through government regulations. They just regulated them out of business here, so they took their business elsewhere. And that's one of the things that deregulating and cutting back all these government agencies is really going to help with.
No, that's a good point. I mean, this is a big process Trump has put in place. As you point out, it's deregulation, it's tariffs, it's cajoling companies to come back here. It's a whole package of things to start the business up next year. So, yeah, I think we will see a better year. And the regulation is a huge and the most amazing thing about that is they kicked a lot of more dirtier industries out of the United States because they polluted. Well, then they went to China. And the numbers I've seen, and this goes back about 10 years, China has about a 15% chance, a 15% cost advantage to the United States because they lack the pollution regulations. Anyway, good call. Thanks, Tom. And I think we have another caller coming on.
Hello?
Morning. Welcome to the Max Out Savings Show.
Yeah. Ted, I got a question.
Hey, Charles.
Yes, I have a question about it seems that the buzzword, at least with this mainstream media, I guess they're pulling it from the socialist Democrats, has been the affordability issue. And it seems to me, for everybody I'm talking to, as far as affordability is concerned, the elephant in the room is insurance, the homeowner's insurance and the automobile insurance, which actually falls under the states, not under the Federal Reserve. In other words, the Fed can't do anything, President Trump can't do anything. It's probably the governors and the legislatures in the states. But it seems to me, using an example, the automobile insurance, I guess when it comes to homeowners, people living in areas, where are subject to hurricanes and all, if they can't get regular insurance, a lot of these places have what they call a FAIR plan, which is kind of like an insurance of last resort, where you pay a higher premium, but at least you get the insurance. And I'm just wondering what your thoughts are on possibly implementing something similar to that with respect to automobile, because this insurance pool business of throwing the bad drivers with the good, and I've talked to people who say that they don't have any, they have clean records, no accidents or anything, and their insurance, auto insurance is skyrocketing, and it's because of the fact that what basically the insurance companies, what they're saying is it's all the sophisticated parts on the car, the sensors and everything, that drive up the cost during these accidents. But the people who are prone to these accidents,
yeah, Charles. Okay.
The people that are prone to these accidents, it just seems to me that they ought to be put in a separate class and not in the same pool with the good drivers. Your thoughts on that?
I mean, look, Charles, you really hit the nail on the head with this. Here is we've got really good callers, because really, if you sit and look at this, they go on and on about the cost of a dozen eggs. It's $1 more. Auto insurance and home, and of course health. Health care, but really health insurance. It's all three of them are the big elephants in the room, and they're completely out of control. If you look at the valuations on them, if you look at the inflation rates on insurance, the only thing bigger is basically college costs, and so it's clearly out of control. They're spending money constantly. You can't watch a football game without watching, a million auto insurance commercials. So it must be pretty profitable. A couple thoughts. As you correctly pointed out, this is more of a state issue. President Trump needs to elevate this to the national level, because we can give the American people free food, and they're going to have an affordability crisis because auto insurance, health insurance, home insurance, home cost, and the interest on credit cards. All these groups are protected by massive lobbying organizations up in Washington D.C. With the auto insurance, the first thing that Trump should announce a national auto insurance summit, call all the governors or the insurance regulators to Washington, D.C. to discuss ways to do it. Now, a couple thoughts. All these 5 million illegal aliens that come in, none of these guys have any insurance. It's constant. Any time a friend of mine gets in a wreck, I hear the other guy didn't have insurance. So we should have self-insurance. You should be no-fault insurance. They're going to have to control the lawsuits, the regulations. We've had clients come in the medical business and say, yeah, we're busy all the time with people doing MRI, that lawyers are sending them MRIs for MRIs. And they're going to have to control all this stuff. And they're going to have to take on powerful interests to do it. They're going to have to take on the insurance industry. They're going to have to take on the legal industry. But it has to be done because they're running the working people. They're destroying their standard of living. And this is a big issue. And Trump started last week talking about the greedy health insurance companies, but just talking, you have to. I think one of the problems and I think Trump has a real problem here, by the way, right now. I think he's been too friendly to corporate America. I think if you look at the drug industry, the drug stocks are all going up. Well, that's telling you that, hey, they clearly have no, honestly, I'd be calling every one of them in negotiating prices. And so I think they're going to have to get tough. I think they're going to have to make, and stand up to these people.
Well, and one final thought, but I'll let you go, Ted. These reports coming out of California or in Florida and all about California issuing these commercial driver's licenses to people who have come over here illegally or legally, depending on what the case may be, and they can't speak English. They can't read the road signs. And there's a lot of this stuff being caught, and these people don't even have names on their driver's licenses. And they're running commercial rigs. And you know, there's been some pretty bad accidents and people killed as a result of this kind of stuff. And you know, this is California doing it. There needs to be something done to kind of.
Well, here's what they're already doing: is they're already canceling like 14,000 commercial driver's license over there. They're getting tough on this, but he's going to have to get much tougher.
Oh yeah.
Look. This is going forward. The 2028 presidential is going to be who it's going to be. It's going to be between two populists. And so Trump better get ahead of this real quickly, or he's going to lose the election. So I'm up against a hard break. Thanks for the call, Charles. We'll be right back right here on the Max Out Savings Show.
The Max Out Savings Show with Ted Gioka is taking your calls now at 713-339-1070. Ted Gioka will return after these messages.
In the 1970s, the big song was the Bee Gees' Staying Alive. Well, it was difficult back then to stay alive if you were a retiree. Inflation was running rampant, and since then, over the last 25 years, it's gone away. Well, inflation's coming back, and it's going to endanger your retirement. If you're a retiree, inflation is your biggest enemy. Hi, this is Ted Gioka of the Max Out Savings Show. If you need help with your retirement, I'd like to help you out. Go to maxoutsavings.com. That's maxoutsavings.com, and we'll show you how you manage through inflation. Don't let inflation destroy your retirement.
I'm Sam Malone, president of 512 New Media. We're Houston's leading marketing and content creation firm for many reasons. Our assets are exceptional, from video production to web design, strategy, and the ability to say no. Saying no is integral in launching a successful, profitable campaign. For example, take a look at Memorial Day. It's a federal holiday set aside to honor and mourn those in our U.S. military who died while serving our country. I'll say it again, for those who died while serving our country. Look, we know people will be at the beach and barbecuing and having parties. We would probably say no to launching a Memorial Day sale. So is there another way to commemorate the day while marketing your brand? Absolutely. And from our experience, the same holds true with Easter Day sales and MLK Day sales and Christmas Day sales. That's why we're different. No cookie cutter, follow the crowd, template marketing. Let's talk. We're 512 New Media. 512 New Media. With better marketing comes better value, creating better results.
Once again, here's your host for the Max Out Savings Show, Ted Gioka.
Welcome back to the Max Out Savings Show. We're just talking about some of the issues out there, everything from insurance to deregulation. I mean, President Trump really has his hands full. And a couple thoughts here. I was disappointed to see Marjorie Taylor Greene resigning. I don't really agree with everything she says, but to me it's just a bad look with Marjorie Taylor Greene resigning, shrinking our lead in Congress. At the same time, President Trump is meeting Mamdani up at the White House, and they seem to be getting along. I mean, I'm sorry, I don't view Marjorie Taylor Greene as a threat. I view Mamdani as the threat, and so this is just kind of disappointing. I think the MAGA, I think people need to get along a little bit, and they're going to have slightly different opinions, but it doesn't, you want to pull all the opinions together, to create a powerful party, and it's just not a good look to see Mamdani up there where Trump seems to be getting along with him. Well, he should have been trying to get along with Marjorie Taylor Greene, who I understand can be somewhat of a pain in the rear, but that's just a thought. As I said, I think Trump is going to have to become more populist. Look, things have really gone off the rails. I won't say gone off the rails, but Trump has not, ever since this Epstein thing came out, it's not been as good. Things have not. And then when on September 9th, with the death of Charlie Kirk, it was an absolute disaster for the MAGA movement. and the conservatives in the cut. I mean, I think that people look back and I think the world changed that day, and I think we still don't understand all the changes. I think they're more profound. We've seen some very large shifts since then, and I'm not sure they're all for the better since then. And we lost, the number one Christian evangelist with young men in the world, and we also lost the a real voice of reason out there with the conservatives, and that brought so many young people to the conservative movement. And I mean, it's no mistake that he was shot, and it's like I said, it's so disappointing that this happened, and I think we're going to continue to see the reverberations coming through with that. Now, and by the way, I think it's affected the markets to some extent. If you look at gold, just an example. Where is it? If you look at gold started moving. It broke out. It was breaking out a little bit about the week before, but the week after it started breaking out and made a real run. That was when it made a real run up, and I'm not saying for sure they were connected, but it moved up. It moved from 3,600 to 4,400 after that happened. And the question is did that change the whole political calculus in the United States? And there's a possibility it did. And so this is something, again, a horrible tragedy on so many levels for the United States of America, the loss of Charlie Kirk. But let me see if we can get over here to the markets a little bit. A very volatile week. A lot of momentum stocks were blown up this week. A lot of stocks that in everything from nuclear to quantum to AI blew up. And this is probably, I tell you, you can almost trace this. You can trace this back to September 9th, same day. That was the day that Oracle announced a $300 billion deal with OpenAI, and the stock gapped up 43%, a massive move up in the stock, and it added. I think it added about $300-something billion in market cap in one day to Oracle, and since then Oracle has done nothing but go down. Oracle's now at lower than it was when this news came out, and all of a sudden people started saying, "Well, wait a minute, where is OpenAI going to get the $300 billion to spend to pay Oracle?" And it comes out that NVIDIA decided to invest $100 billion in there, and Oracle was going to spend $300 billion, or NVIDIA was OpenAI was going to spend $300 billion, and then Oracle was going to spend billions, tens of billions or $100 billion buying chips from NVIDIA. And people started, and then they started asking questions, and they're like, "Well, how are they going to pay for this $3 billion?" And then the CFO of OpenAI says, "Well, all of a sudden you started hearing that private equity was going to get involved. Brookfield, Apollo, they were going to be buying AI plants." Well, remember, this started at the beginning of the year. The tech companies had massive balance sheets, and they were going to pay for everything. And then all of a sudden these numbers came out. Then it was going to be private equity. Then Sam Altman and his CFO are starting to say, "Well, we might need government backing. This is a critical industry, and we might have to have them backstop." And all of a sudden people are going, "Wait, what is going on? Where are you going to get the money for this?" And since then, these stocks have been selling off. There's been what I call, since September 9th, there's been massive distribution of big tech company stocks. And distribution is big selling. Is people are selling, and if you really look at it, there's been a lot of selling. Microsoft has been selling off. It went and gapped up. It had a big run up in October, and since then it's broken down. It gapped up, went down, same thing. Well, they're having to spend tens of billions, hundreds of billions of dollars. That means they got to cut back their stock buyback programs, which is kiting all these things up. Apple's held up better because they're not spending as much money, so they can pour all this money into buying back their own stock at 30, 40 times earnings. But since then, you've seen classic distribution. The same thing with Meta. Again, big sellers coming in. It gapped up on good earnings in August and really went nowhere, and constant selling, and it broke down. The next earnings came out, and you're going to have to spend what? How much on AI? Stock goes plunging down from 760 down to about a little under 595. And so again, the question is, where do they pay for that? Because remember, we need to borrow $2 trillion this year, a little less than that, to pay for the government. The AI companies are always borrowing money. The Japanese are going to come up with a $200 billion deficit. I mean, not a deficit, but a stimulus program. They're wanting to borrow money. Interest rates in Japan are going up, which is kind of messing up the carry trade. So where are you going to get all the money to build all these factories that are coming back to the United States? What about all the defense factories that are going to be having to be built so we can rebuild our armaments that we basically have shipped over to Ukraine and Israel? All of these things, and to get ready for a possible war with China. And so all these are putting demands on money. And so the question of AI, how are you going to make money on AI? Why is this so expensive? And then the AI got so ridiculous. People are like, well, really, the big problem is electricity. We don't have enough electricity. I think as a show a week ago or so, we were talking about the AI spend, the huge amounts of. We have not grown electricity generation in about for the last 15 or 20 years in the United States. China has grown exponentially their electricity. They're putting in power plants. Remember the coal plants? They were putting in one coal plant a day for a while. They're putting in solar plants all over the place. Well, in the United States, we've been cutting back. We've been mothballing all our coal plants and shutting them down early because Larry Fink and the crew at Davos said that was the CO2 was killing the atmosphere. So we were shutting down coal plants in the United States. China was opening them up. So now they have plenty of power. And by the way, coal is very steady. It's constant and it's cheap. Well, now we're having to build out expensive nuclear plants and all types of other plants to try to supply the AI. That's running up electric bills. In some parts of the mid-Atlantic states, electricity bills are up like 20% in the last year or two. And so again, and then people go, well, I can't afford anything. So again, all of these things have long-term consequences of horrifically bad policies put in place by the Democrats, and particularly Larry Fink in the Davos crowd, the World Economic Forum, a new group of elite leaders, out of Europe that were going to lead us to this new golden age. Even you're like, wait a minute, Europe hasn't done anything in 100 years. As a matter of fact, since World War II, I don't think they've had one major invention that's helped the world that I can think of at all. And so all of these things, so here we are today. We're in need of power. We're in need of electricity. We're in need of money. We're in need of a lot of things. We're in need of more armaments. We're in need of AI centers. And so that's helping a build out here, but it's putting strains on the financial system. And here's the question you got to ask yourself. Do we want all our money in the United States? Do we want it all going into Wall Street, building out stocks and pushing stocks higher, or do we want that money going into AI centers, manufacturing centers, defense operations, upgrading our highways, building a better United States of America? And that is the battle that we're starting to see here in these markets now. I believe it's interesting, this decline, and this is why I think to some extent we've seen this big distribution that we've been talking about. It's like, who is the big sellers in here? And, they're clearly in here, and I just can't. They really struggle a little bit to figure out who they actually are. Usually, I can give you a pretty good idea exactly what's happening in the market, but it's not just stocks. Real estate. There's been selling in real estate. And also crypto. Crypto has blown up. This week, the market had a horrible Thursday. And I figured, well, it's probably going to bottom, sometime in the morning. You have a margin sell off, and then it'll go up from there. It opens up. Well, overnight crypto drops 10%. There's no reason in the world why anybody would be going in on the opening with a 10% drop in crypto overnight. That's not a positive at all. Yeah, and so clearly you had either the stock buyback desk at Goldman and stuff ramping up sales, ramping up buys to try to stabilize the market, in my opinion. And the question is, did they actually put a bottom in? I'm not completely convinced, although I was talking to someone yesterday. I mean, we have some hedges on and stuff, but really our performance really comes from stock picking, and our stuff seems to be holding in reasonably well. We have some stuff going down, but I think we're pretty correct overall. And a couple thoughts. Crypto's down 33% year to date. Look, I've been hearing about this crypto is a store of value. A store of value doesn't drop 33% in a month or two. I'm sorry. Hello. It's like crypto almost in many ways resembles some type of Ponzi. Look, full disclosure, we're looking at this. Maybe do we put a little in the portfolio in an ETF or something? But the problem I've been because they make a very good case that people are going to start investing in cryptos. Countries are going to have crypto reserves. Crypto is going to be used for stable coins. The crypto ETF, and then put cryptos in 401ks now. And so you kind of go, well, I can kind of see where the demand is going to come from, and it is sort of an alternative asset class. But then I've been asking this for 3 weeks to one of my friends that really know crypto more than me. I'm like, well, I buy all that, but why is it going down? You know, it's like, yeah, I mean, it looks good. I agree with what you're saying, but why it should be going up? Instead, it kept falling, and I don't know if mining and crypto is becoming more expensive because they're shifting from mining crypto to selling the electricity to data centers. I don't know if people are looking at quantum and figuring by 2028, you know, they'll have the ability to crack the blockchain. Okay, hold on just a second, Chuck. And I don't know what that's going to be, but there's something that's spooking the crypto market. So it's going to have to get a bid in here somewhere. And the other thing is MSTR strategy, which is a big kind of parlayer. They buy crypto and they sell preferred stock and buy more crypto, and it keeps going up. Is in a lot of the indexes, and some of the indexes are going, wait a minute. This doesn't look like a company. It looks like a crypto fund, so it shouldn't be in the indexes. They're going to have to make a decision by the end of the year here whether to keep those in there. If they kick them out of the fund, it's going to hurt MSTR strategy of buying Bitcoin, because they're not going to have access to the cheap capital that's of being in the index funds. And so these are all some things in here with crypto. I'm not sure what to say on crypto, but here's the thing. If you look at the price of gold was off $20 this week. You had stocks falling all over the place. You had crypto down 10% in one day. Gold held up there. Again, that's it. Somebody is buying a lot of gold out there. They continue to buy gold, and even when you get bad markets, these guys are in here, and I think that's really telling you something about, you know, something is out there that people are saying that they want gold. They want gold. Is it a reset of the monetary system? I don't know what it is. But they continue to buy the gold in this market. I mean, it should have been nothing for gold to be off $200 or $300 this week, with crypto being down in the market, but it didn't happen, and that's an interesting thing we want to watch. Now, I'm more into some of the gold stocks were down big Thursday. That was from crypto people dumping stuff. Because if you look at things like Tesla, if you look at the gold, you look at a number of the hotter things out there, the crypto guys were in those too, and they're liquidating everything to meet their margin calls. Because remember, crypto, there's much lower margin levels, so they can borrow a lot more money and kind of pyramid their position. And these guys are all getting blown out now. So that's some of the things you're seeing. It's a very complicated week, but the question is, did we bottom? We're going to discuss that and take a couple calls right after this quick break right here on the Max Out Savings Show.
The Max Out Savings Show with Ted Gioka will return shortly. To speak with Ted Gioka now, call 713-339-1070. Back in a moment with the Max Out Savings Show.
This is Ted Gioka, host of the Max Out Savings Show, one of Houston's most popular financial radio shows, celebrating over a decade on the air in Houston, Texas. With stocks at record high valuations and interest rates near record lows, you need to have your guard up. You need to have a plan to manage risk to your retirement. Do you? At Max Out Savings Advisors, we have a risk-based value investing approach to your retirement. If you would like some help managing your retirement, go to maxoutsavings.com to set up an appointment. That's maxoutsavings.com. Hi, this is Ted Gioka of the Max Out Savings Show. Our motto and philosophy is to save aggressively and invest conservatively. The world is changing at a faster rate than any time in the last 50 years. The investment world has changed. Have you changed? Inflation will destroy your retirement. It is a different world that requires different strategies and ideas. The era of indexing and investing is over. If you need help, listen to the Max Out Savings Show. Our show airs every Saturday at 10 a.m. and Sunday. We talk about investments, the world, and where the world is going today, and help you understand it and help you save money and build up wealth. It's the Max Out Savings Show. And if you need some help, go to our website, maxoutsavings.com. That's maxoutsavings.com. On the website, you can sign up for the free Max Out Savings Report. Our report covers all types of these big issues, the changes in the world, and helps you understand and protect your retirement. So go to the website, maxoutsavings.com.
I'm Ted Gioka, and I approve this message.
Inflation, instability of the market, bonds, precious metals, oil and gas, and lack of old-fashioned cash puts your retirement at risk. It takes a different type of portfolio to deal with these issues, and that's where Ted Gioka can come in, and he can help. Go to maxoutsavings.com and schedule some time with Ted. That's maxoutsavings.com. And listen to the Max Out Savings Show every Saturday at 10 a.m. on AM 1070 and FM 103.3. The Answer.
And now, more of the Max Out Savings Show with Ted Gioka.
Welcome back to the Max Out Savings Show. I want to say a quick word about one of our sponsors, Rangoni Alto Gin. It's a fine botanical gin from the northern Italian Alps. It's all organic botanicals that are put into it. They use the finest water. It comes out of the mountains. It's glacier water. And they put together just an incredible drink. These people have been up in the mountains, have been brewing these drinks for hundreds and really thousands of years up there, and they were able to put together just an incredible gin. It's called Rangoni Alto Gin. Look for it at the fine liquor stores like Specs, Total Wine. Look for the Kingfisher bird on the label. It's Rangoni Alto Gin. Now, tell you what, I think we have a call from, was it Chuck? Welcome to the Max Out Show.
Hey, Ted, I checked about a month ago as to what the margin was in the stock market. It was $1.2 trillion, which indicates to me that, we've had a pretty stable upward market. So it's brought out all the speculators and all the people with the gambling juice. So I think what's happened in the last couple of weeks is they're getting blown out, like in Bitcoin and everywhere else,
Yeah. Oh, yeah. No, I think that's a good point. It really is. I mean, they just blown up a lot of these stocks out there, particularly the more speculative ones. I mean, some of them have dropped 50% in the last month and a half.
Yeah, I think a lot of people, if they could buy Bitcoin for $10,000 a contract when it was at 116, they would use that, figuring they had some easy money there. Because how else do you explain a $20,000 drop in a month?
Yeah, no. In the crypto, I mean, in the stock market, you get 50% leverage. You can borrow on the crypto. I think it's like 75 or something, some ridiculous number. And a lot of these people have just been completely blown up. I mean, and I think that could slow the economy some, and as well. And so when you get a number I saw was about $500 billion worth of losses. So, and that's more younger people. I've said this before. Most people over 40 really did not get Bitcoin and Ethereum at all, and early on, but younger people grasp it very quickly, and so which puts more pressure for the election coming up. I mean, these people are going to become even more radicalized. I mean, the young people are really upset. They cannot afford a house. They can't afford, they have college loans that were just too high. They can't get jobs. AI is forcing a lot, not forcing, but being used as excuse for a lot of big major corporations, to let go workers, and they're not hiring. And so it's not a good situation. And President Trump, I believe he recognizes this is going to do something about it. But the margin is really the problem out there. The question is it over? And I'm not convinced. Looking at the market, we stopped at about the 100-day moving average, and for the Nasdaq and the S&P 500, and so the question, does it hold here or does it go back up? This is the interesting thing here. If you look at Thursday on the market was up, and NVIDIA reported great news. And the market went up 1.4% on the news. NVIDIA skyrocketed, I think, 180, 196. And then it all reversed, and it went up over the 50-day moving average on the S&P 500. And then it reversed and went down, and ended up down and hit the 100-day moving average in one day. When a market reversed to that extent after being up 1.4%, that's only happened 8 times in the last 100 years. So it's a very rare occurrence. And it really, I mean, if things were that good, that would not have happened. And I don't think the bottom was put in yesterday after something like that happened, because it was kind of, up and away. Jensen Huang, the first thing he said is there isn't a bubble. We got more business than we know what we can do with, and everything is great. Well, obviously something is wrong, because you had that massive reversal. And what happened is when it went reversed up, all the shorts covered. And the minute the shorts were gone, more selling came in. There was nothing underneath the market anymore. And so anyway, but back to your margin point, the margin is a big issue out there.
Ted, I'll get off the line, but my feeling is that there's a group of older conservative investors who've determined that the top's been made, and they're going and they're selling, and they're just going to park their cash like Buffett. And like you say, the younger guys, with all the hype out there, they still believe that maybe we have another shot at another ride up,
That's
anyway,
a good point.
Thanks. Sir.
Yeah, no, thanks for the call. We've had phenomenal callers today. Look, my gut feel is, I think some very sophisticated, very wealthy, and very powerful people have figured out that thinks this market stops in, and because you're kind of seeing it from some of these big, and I don't know if it's some of the venture capital people out in Silicon Valley. I don't know who it is, but they seem to be a lot of distribution, which is a fancy word for selling. Where they're distributing the stock out on the market, and when we buy something, we'll buy, $500,000 and sometimes $2, $3, $4 million worth of stuff at a time. These guys have hundreds of millions of dollars, billions of dollars worth of the thing. They can't do it like us, and we call up our block trader, and they'll work it, and we'll work it on the VWAP for the next 2 hours and get you in or out, type of thing. So it takes these people time to get out of their positions, because if they sell it all at once, it'll go straight down. The stock will drop 10%, and that's what appears to be happening in this market, and that's why we're somewhat cautious. But again, we do have a hedge on, but we like our stocks we're in. We've made some purchases here recently. We think that the natural gas sector, if you sit down, as we said earlier in the show, China has been building, for a while it was one coal plant a day. Now they're building natural gas. They're building solar. They have plenty of power. We're the ones that are short on power. And if you look at it, it takes 5 or 6 years or more for a nuclear plant. They're going to try to build some nuclear plants. But the easiest way is the coal. And quite frankly, if they could get the generators and the turbines, they could build them out even quicker. and so I think there's going to be big demand for natural gas to power all these things, and so it's the easiest way to do it. So we think natural gas is going to be. I think next year is going to be a big winner. The price is already going up on it, and I go back to years ago when I invested in some oil and gas wells, and I watched the price of gas pretty closely. It was. If we're getting $3.50, we get about $3.50, sometimes $3, and if it went to like $4.50, we were all thrilled. This was like in '95. This was like 30 years ago. I can't believe it's that long, and you're kind of like, well, wait a minute. $4 was a reasonably good number then. It's the same price now, and it's 30 years later. And look at the cost of everything else. And so I think there are real opportunities in this market, and I think there's opportunities to get good income in this market, and I think this has been kind of a momentum blow up in the market and stuff, and we have to kind of watch and see where this is all going. And I think as we talk so much in this show, in this environment with your retirement savings assets, you have to spread your risk around. I think I think the S&P 500 and 60% stock in the S&P 500 and 40% in long-term bonds is, with the $38 trillion deficit is not the way to go going forward. And I think you can be much more conservative with your funds and get better returns. And I think particularly going forward, that's going to be the case. But you have to spread that risk out into other assets. Gold's been the top performer this year. As we talked about, the market's been a disaster this last couple of weeks, and this week gold was down 0.5%, and Bitcoin dropped 10% in one day. So there are other ways to manage retirement for the long term with your portfolio. Let's take a quick call. Welcome to the Savings Show. Hello.
Hello.
Yeah, welcome to the Max Out Savings Show.
I was listening to Charles a while ago. Charles always has a good insight, a level thinker, I think. And he talked about the elephants in the room. He's right. But we have a Congress that is subject to big money. Who holds the gold makes the rules, And I think what we're seeing is that our Congress and the power players in America, and not just America, all over the world, we're seeing that in Mexico now as well, they are catering to Wall Street, and they have been shoving Main Street to the side and saying, yeah, we'll get to y'all soon. But the truth of the matter is our Congress goes in making $175,000 a year, and they all leave there as multimillionaires. So that should tell us something. Right now, the general populace, the micro, is being shoved aside for the macro, and it's a battle that's becoming more and more obvious and more loud. And so somewhere down the road, these people are going to have to become accountable. They're going to have to address our needs. You're right. You told us a while ago we need highways, we need bridges that are falling apart. We need a new electrical grid all over the country. And nothing is being done, and it's been that way for years, to enhance or to improve our infrastructure. And we're being left behind as a result of Congress selling out to big pharma, big energy, big insurance. So I don't know what the answer is, but
I think that's a good point.
One day.
Yeah, I think this is a key thing right here. And by the way, the fact that Marjorie Taylor Greene resigned this week is going to put more pressure under Trump. I think he's going to shift to be much more populist. I think J.D. Vance is a big time is much more of a populist, and I think they're going to clean house up there. I think Trump, because Trump, if he continues the way he did, we're going to lose these elections, and there's going to be impeachments. The whole cabinet's going to be going to jail, impeached. They're probably rounding up everybody, and so they've got to win, but they're not going to win their programs are good, but it seems to be showing too much favoritism. They have to look at some of these issues that the insurance is the big one: auto, health, and home insurance, and credit card debt, and maybe putting a cap on credit card interest. And they're going to have to do something, because if not, the populace are going to get a hold of this and they're going to win. And so, yeah, I mean, I think this is a big point. It's not that, we all want, corporate America to go down. It's that it needs to be a level playing field. And it really, I mean, you could see that with Google. They got them dead to rights on monopolies. And a friend of mine actually was in charge of this. I won't go there, but he even predicted this. He must have been 10 years ago, but they went and they got them dead to rights on monopolies, and then they let them off the hook. Anyway, so I think you're going to see big changes on Trump. And anyway, but thanks for the call. So what, we're wrapping up the show here. So I'm not convinced this bottom is in just yet. We're in a seasonally more stronger time. I think we're going to have a much better economy next year. It's very muddled. We don't have the data because of the government shutdown. And I think it's just going to be muddled in here. I think you have to be cautious. See what happens in the next couple of weeks as well. And you want to continue to diversify your assets, have cash on the sideline, and protect your retirement. If you need some help, go to our website, maxoutsavings.com. That's maxoutsavings.com. We've been in the business managing retirement money for well over 25 years now, and we'll be happy to sit down and help you. I'm here in Houston, Texas. Just go to the website, get our phone number, call us up, or send us an email. But at a minimum, sign up for our free newsletter. There's a little button on the site. We send this out once a month. I'll be writing the one this week, kind of talking about all these big issues to help you deal with retirement, help you understand the world today, and try to get you an idea of what's going to happen next. And we try to make them simple so you can understand these complex issues. It's maxoutsavings.com. That's maxoutsavings.com. And remember our motto in philosophy, which is to save aggressively and invest conservatively. That, my friends, is the key to building up wealth over the long term. We'd like to help you out. If you get a chance, go to our website, maxoutsavings.com. I hope everyone has a great weekend.
AM 1070, The Answer.
This has been the Max Out Savings Show with Ted Gioka, a presentation of Max Out Savings Advisors. Join us next Saturday at 10 a.m. for the Max Out Savings Show with Ted Gioka on AM 1070, The Answer.
AM 1070,